The US dollar is, well, looks like it's a trading mix versus all the major currency pairs, but against the three major currency pairs, the dollar is down again. That includes the euro versus US dollar against the pound versus US dollar against the dollar versus yen. In this video, at the start of the US session for May 6th, I will take a look at those three currency pairs from a technical perspective and outline the key levels that are in play for them. So let's get started. I'm going to start by taking a look at the euro versus US dollar, and you can see the ups and downs that we've experienced in this currency pair in trading last week at the session lows right here. The market came down to test this low right here. We also moved below what I have as a horizontal line near the 1.1273 level. That kind of dissects a couple key technical levels. It's at the point of being like a cliche. It dissects the high price, I should say, going back to this point right here. This is in July of 2023. Also, it dissects, I'll go back even further, the 61.8% retracement of this move to the downside. This is the high from 2020 to the low from 2022. 61.8% comes in at 1.1271. So 7.5 and 7.1 make a average of about 1.1273. And that's where we keep on finding some support near that level. Now, last week we did move down to a low of 65. You can see it in this hourly chart right here. But that, again, corresponds with this low right here. And we found support buyers once again near the 73 level back here on, I guess it was Friday's trade. And in trading here today, what did we do? We came back down toward that 73 level, found early buyers in the Asian session, and started to rotate back to the upside. Now, the high price that we saw in trading here today came right up to the 200-hour moving average. And that level has been broken over the last two trading days, prior trading days. And each time the market moved above those levels, the market failed. So coming up to that 200-hour moving average, the traders said, I'm going to stop right there. And they have, and they pushed the price back down toward this level right through here, which is another floor level that we saw before breaking and trading above and below through this level. We did have periodic times where the price came down to that level. So there's a lot of stuff going on right here between the 200-hour moving average, 1.13469, the 73 level, 65 level. Maybe you can go down to 38.2% retracement of this move to the upside. All those levels have to be taken out on the downside to increase the bearish bias. On the top side, the simple rule is get and stay above the 200-hour moving average. If it can do that, then the buyers are starting to win a little bit more in the short term, at least. Well, actually, in the short and medium term, and we can expect further upside momentum in the euro versus US dollar. So those are the key levels. Let's take a look at the dollar versus yen. And what we saw a few days ago was that the price moved up to test its 200-bar moving average on the 4-hour chart right here and found willing sellers. In trading today, what did we do? We came down to the 100-bar moving average 4-hour chart, bounced higher, and then rotated down. And as you can see, as we start the U.S. session, we are moving below that 100-bar moving average on the 4-hour chart. So sellers are making another play after getting through all these landmines of the 38.2% retracement, the 100-hour moving average, the 200-hour moving average. You can see the momentum that developed after we broke below the 200-hour moving average today. So buyers turned to sellers, and now we're trying to break through the 100-bar moving average on the 4-hour chart at 142.85, currently trading at 80. If we stay below that level, that'll be more bearish, and we look toward this swing area down through here as the next key target for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And this currency pair is making a break to the upside. Yesterday, we tried to get above both the 100 and 200-hour moving averages. They both converged right here, but the market failed, and we rotated back to the downside. Where do we rotate down to? We rotated down to a familiar floor level over the last few trading days at 1.32594. And once again, we found support buyers against that level. That level has been tested, well, a number of different times over the last few trading days, here and here and here and here and here and again here today. So finding support against that level and not going below it gave the buyers to go ahead to push to the upside. The first thing it did was move up to the 100-hour moving average, bounced off of that to the downside a little bit, and then moved above it. We use that level as a support right here, and that's propelling the market to the upside here in the early U.S. session, with the dollar selling against the yen, dollar selling against the pound versus U.S. dollar as well. We're into this swing area up through here, which comes in between 1.0 1.33619 and 1.33784. I want to put it in yellow, actually. There we go. Right here. If we can get above that level, then it opens the door into this extreme up through here, which took the price all the way up to the 1.34413 level. And if we get above that level, it opens the door for further upside potential for the pound versus US dollar. Taking a look at the daily chart, this is where those high prices came in and near this swing area all the way up to 1.34902. So get above that level, opens the door for further upside momentum. So there you have it. A look at 3 of the major currency pairs. Kickstart your trading day to May 6th. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.